Senator Canavan.
Mr. President, I'd like to compliment Senator Wilson for a very considered speech, and it's a very, very important topic, this one. It goes to the security and safety of our financial system. However, I do take some issue that, with the senator that he doesn't seem to have actually dealt with the full details of this motion. Just previously in the Senate, I was quoting from, I was mentioning, referring to the Burke and Wills expedition, and I didn't quite get to finish my remarks because other senators wanted to have time. So bear with me while I draw a bit of a long bow. I just wanted to get this on the record. There was a book I read by Sarah Murgatroyd recently on Burke and Wills, and it had a great description in the book about how the expedition started out. And I quote, "Luxuries were well catered for: a large bathtub, an oak, a cedar table with 2 oak stools, and 45 yards of gossamer for fly veils. Yet the party took just 2 sets of field glasses, 2 watches, and only 12 water bottles. Were 12 sets of dandruff brushes and 4 enema kits really necessary? There were 6 tonnes of firewood, 200 kilograms of medications for the camels and horses, and enough ammunition to win a small war." And why I bring that up here, Mr. Acting Deputy President, is that just like the Burke and Wills expedition, they were very overloaded. It was one of their big problems. And this motion is way too overloaded as well, Mr. Acting Deputy President. It's always a good idea to travel to Queensland. It's always a good idea to travel to Queensland, as Burke and Wills were doing, and it's always a good idea to debate financial regulation, Senator Wilson, but it's not a good idea to overload your motions with too many ideas. And I note that until the very end of your comments, you'd barely mentioned the first part of this motion, so I think it's worthwhile actually to read out to the chamber that the motion that we're discussing here in general business this afternoon is that the Senate is of the opinion that rather than punishing the unemployed, sick, elderly, students and families, revenue should be raised through applying a public insurance levy on the Big Four banks that are too big to fail. Now, my reading of that motion is that you are considering that we should be using a too big to fail levy, if you like, to fund other types of expenditure, in this case largely social security type expenditure. But in fact that's not what your comments went to just previously, because what effectively you were talking about by creating such a fund, by charging such a levy on the banks, is, if you like, a rainy day fund, that we should build up some kind of capital reserves for the government, such that if the worst were to happen, and let's all pray that it would never happen, but if it were to happen, we would have some resources there to offset the damage and carnage which would obviously ensue. Well, you can't spend a rainy day fund while the sun is shining and still have a rainy day fund there. If the whole purpose of what you want to do is put aside some funds for when something might go wrong, you can't spend that money before that event happens. But that's what the Greens are suggesting we do here. And I wrote down, I hope I got the quote right, but I was listening to Senator Wilson quote from the RBA, who he said had suggested this idea to the Financial Services Inquiry, chaired by David Murray, and I agree with him. It's not a crazy idea in and of itself. The RBA and other eminent economists have suggested it, but their quote said, or what I wrote down said, that this fund will build up a fund that will help pay claims in the event of a default. In the event of a default. The RBA did not go on to say, and I haven't read their submission, but I'll stand to be corrected, but I don't believe they went on to say that the fund will help build up a fund to help pay for benefits to unemployed, sick, elderly, students and families. That's not what the fund is for. That's not what the RBA has suggested to the Murray Inquiry, and it's certainly not what other economists have suggested as well. But what we are seeing here, Mr. Acting Deputy President, is this sequel, is the mining tax sequel right here today. I've listened for the last few years. The Greens have constantly referred to the mining tax as this kind of endless pit of funds to fund all kinds of weird and wonderful ideas. Whenever you're on the ropes, you're in a media interview about how you're going to fund high-speed rail, how you're going to fund universal dental care, you can always just say we're going to tax the mining companies. That's the common response from people. But we've seen over the last few years that was completely a dream, a misguided one at that. I remember hearing the Leader of the Greens, who's in the chamber here now, at the Press Club last year in February, make this comment, and I'll state, and I quote, "Labor refuses point blank to fix the loopholes in their dud of a mining tax. It is foregoing the revenue needed for key reforms, including implementing Gonski, number 1, I'm adding the numbers, and dramatically increasing funding to our public schools, number 2, fully implementing a national disability insurance scheme, number 3, expanding Dentacare, number 4, or building high-speed rail." All of those promises, Mr Acting Deputy President, were going to be funded by the mining tax. Now, admittedly, the Greens preferred Rudd's original resource super profits tax. What a great name that was. I forgot about that until I mentioned that. Resource super profits tax. Who came up with that? That was a fantastic name. 10 points, exactly. And that tax, we know from Treasury estimates, from FOI documents, was going to raise $100 billion in its first 10 years, as it was proposed. It obviously never made it into law, but it was planned to raise $100 billion in 10 years. And Senator Millen had made all these promises from that mining tax. Now, Gonski was about $5 billion a year at the time. It's since changed, but at the time it was about that. That was $50 billion then over 10 years. The NDIS was about $75 billion over 10 years, and that's quite conservative. Dentacare, or universal dental care, would be about $55 billion. And of course, a high-speed rail, Mr Acting Deputy President, is $100 billion from a recent, I think, Ernst & Young study, but a recent Ernst & Young study, about $100 billion. So all of those promises add up to $280 billion. They were all going to be funded by a mining tax of just $100 billion. In one paragraph, we had a black hole of $180 billion. And we are now seeing the sequel to this process, Mr Acting Deputy President, because now we're going to probably have a debate over the next few months from the Greens that, well, the mining tax is gone, and that proved to be a bit of a false dawn. But we still want to spend all this money on all these programs. We still want to have a high-speed rail. We still want to have our ice cream and our cake and all our dessert, as well as everything else. So we're going to have to find another rich daddy to come and pay for that, and that is now going to be the banks, according to the Greens. The financial sector can help pay for it. Now, about the time, or just a year or two, I think, before Senator Millen made those comments, you might remember, Mr Acting Deputy President, that Ken Henry, the former Treasury Secretary, once said that there was not a computer big enough in Treasury to cost the Greens' policies. Now, I think we're seeing the same example here. There's no costings that have been presented by Senator Whish-Wilson on this process. He mentioned some estimates of what the levy could raise, but as I said before, this is a motion not about a deposit insurance levy only. It is apparently going to be used to fund all these other things, but there was no costings there, and about exactly how much he wanted to spend on all these other things. But we're used to that from the Greens. I do want to go back, though. I do want to seriously engage with the issues that Senator Whish-Wilson has remarked on. It is, as I said in my opening remarks, it's a very, very important issue. But I don't believe it was fully dealt with or fully explained by the senator in his previous remarks. He is right that a few years ago we made the decision to introduce a financial claims scheme, a large-scale deposit insurance scheme, at the height of the global financial crisis. And I agree with him that it was the right thing to do, an unfortunate thing to do, but something that was necessary. We were very lucky in this country for years, for decades, to not have to rely on a deposit insurance scheme like other countries, but the scale and speed of the global financial crisis did necessitate change. I think the coalition at the time was a little concerned about how large the deposit insurance was in its initial form, which was originally $1 million cap, which was much, much higher than other countries. However, that since has been reduced to $250,000 now on everyone's deposits, every deposit account, which is in line with the United States now, so it's not too far out of whack. But what Senator Whish-Wilson did not refer to in his remarks is that the former government did not just roll this out with no plan to fund the financial claims scheme. What the government, that then Treasurer Wayne Swan, decided on was that we would not introduce a deposit insurance like exists in the United States and, as the senator said, which now exists in the United Kingdom. but that we would fund it through a ex-post levy, not an ex-ante levy, but an ex-post levy, and that was not mentioned in the Senator's remarks. So what that means, Mr Acting Deputy President, is that we have decided at the moment with the financial claims scheme that if, God forbid, the worst happens and there is a default in a financial institution, we would seek to recover the costs of the deposit insurance from two sources. One, of course, the remaining assets of the financial institution that becomes insolvent. And if they, by definition, if they're insolvent, those assets won't be enough. But to fund the remainder, we would at the time then put in place an ex-post levy, so a levy on the financial sector of what is remaining. So it will eventually be funded by the financial services sector if we were to get to that spot, if we were to get to that place, and let's hope we never do. But if that does happen, it will still be a charge to the financial sector, and of course the financial sector knows that. That is publicly available, and they will factor that into their decision-making because they know that if there is a default or a failure, they will be up for the charge. Now, the other thing I don't think that was mentioned by Senator Whish-Wilson is that while he is right to say there is a market failure here, if I could use some jargon, Mr Acting Deputy President, a moral hazard here. We don't just have the tool of levies, either ex post or ex ante, to deal with that market failure. The other way we seek to deal with that market failure through our system is through prudential regulation. So we require all of our banks, all of our insurance companies, all of our building societies and credit unions to put aside a certain amount of capital against the liabilities that they have on their balance sheet, that is their deposits largely. So depending on the riskiness of those liabilities and their assets that they hold, they have to hold certain amounts of capital. Now, those prudential requirements themselves are changing at the moment. The much maligned Basel II process is coming to an end, which some say helped cause the global financial crisis, and there's a new set of prudential regulations coming in Basel III, which will change a lot of the risk weightings for banks, which will require financial institutions to adjust their positions, and which we do hope will help avoid, at least in other countries, what we saw in the global financial crisis. Now, of course, we in Australia did not face the crisis that other countries did. Some would argue that it was our superior levels of financial regulation. I am a bit more sceptical of that. I do think we do have a very good financial regulatory structure, but we should never be complacent and think that what happens somewhere else cannot happen here. So there is a case to make sure that we continually improve that in a methodical and careful way, because these are very serious issues, and that is why the coalition government has established the Financial System Inquiry, as Senator Whish-Wilson mentioned, chaired by David Murray. We are serious about making sure that we do look at all of the issues here that are involved to ensure that we make the right decisions, to ensure that we make no sudden changes, and to ensure that we think through all of the ramifications, perverse or otherwise, of any change. And that inquiry, the Financial Systems Inquiry, has released its draft report, I think, a month or two ago, and it did deal with these issues, the issues that are before us in this motion. And I just want to quote a little bit from that because I think it helps explain the issues that are involved. The Murray Inquiry says that currently the financial claims scheme is post-funded, as I just explained. This means that if it were activated, the government would initially pay out claims and then recover those funds from the assets of the failing institution. If that was not sufficient, the remainder would be recovered through a levy on the rest of the banking sector, which could be delayed until the crisis was over to avoid exacerbating the situation. An option, as Senator Whish-Wilson has suggested, is to charge ADIs and LDIs, authorised deposit-taking institutions, an ex-ante fee or pre-funding for the financial claims scheme. The IMF has recommended this. It's in a recent report that the Murray Inquiry quoted from. But the Murray Inquiry goes on to say, and this is very important, Mr Acting Deputy President, that we all realise what would happen here if we introduce something like this. The Murray Inquiry does say that, however, an ex-ante model, that is a a levy in the form that Senator Whish-Wilson is proposing would impose a cost on the financial sector. In particular, industry would need to pay a fee that would likely be passed on, at least in part, to depositors in the form of lower deposit interest rates or higher fees. This would be the case even if there was no need to activate the financial claims scheme. By contrast, the current ex-post funding only imposes a cost on the industry if the guarantee is needed. So let's be very clear here, Mr Acting Deputy President. If we were to introduce such a fee, if we were to do what Senator Whish-Wilson has proposed, it would impose a cost on our financial sector. It would lead to higher fees that Senator Whish-Wilson was complaining about. It would possibly lead to lower deposit rates for consumers. There is no free lunch here. Somebody will have to pay for this. So we should be very careful before we would even consider implementing something like this. And because we are being careful, that is why we have put in place the Murray inquiry. That is why we are taking this step by step. It is regrettable that the former Labor government did not follow such a careful process. They had years, Mr Acting Deputy President, to think about this issue. This financial claims scheme, I believe, was introduced in early 2009, and nothing. Well, they did do a review of it admittedly and reduce that threshold, as I said, from 1 million to 250,000. But they did not take the opportunity in that review to introduce an ex-ante levy. What did happen, though, is just before last year's election, surprise, surprise, the Labor Party announced that they would, in fact, introduce an ex-ante levy. They would introduce it, and convenience of convenience, they not only introduced the levy, they used the levy to help reduce their bottom line, to help reduce their deficits that they accumulated and could no longer escape from because the pre-election forecast outlook was about to come out. The real figures were about to come out just before the election. So at the last minute they introduced this fee to help offset the massive spending they presided over, the massive deficits they presided over, in a final futile attempt to cover up their mistakes. Now, there were two mistakes with that decision. Number one, as I said just earlier, this decision should not have been made in such a rushed way. It was sprung on the financial sector. None of them knew it was coming. It was very much mining tax Mark II because there was absolutely no knowledge of the affected parties that they were going to be up for such a charge. And the second problem with the Labor Party's approach was that it should not have been used to fund the general revenue. It should not have been used to go into the underlying cash balance, to go above the line in the jargon of accountancy, because it was, as I said earlier in my remarks to start this contribution, it was to offset any potential future problem. It was a rainy day fund. It was an insurance pool. It was not something to be used to fund general expenditure, which the Labor Party tried to do. So I am very confident, Mr Acting Deputy President, that we, on this side, that the coalition government will not follow the approach of the Labor Party. We will go through these things in a methodical way. We will not be supporting this motion because we cannot use such a fee, as I said earlier, to fund all these other things that are uncosted and unthought through, and we will not make rush judgments on this issue. We will wait for the Murray inquiry findings and consider them in due course. But at this stage, my understanding is the coalition government has no plans to introduce such a fee because it would be a cost on the financial consumers of this country, and it is probably something we do not need, given our strong levels of prudential regulation, given that some of those regulations are currently being changed and strengthened, and given that we already have a mechanism to fund the financial claims scheme in an ex-post way. So I'd like to conclude by once again saying that I do give credit to the Senator for bringing this forward. I do have some sympathy for him having to sit in the Greens party room. I think this motion would have been much better designed if it didn't need the preamble there that does smack of green ideology and wanting to be all things to all people. This is a very serious issue and we must approach it in a mature way. I thank the Senate for having my contribution to this debate.
Thank you, Senator Canavan.